If I was right and I did a trade, it wouldn't satisfy me. I know enough to know that I did something at a time when I'm not really focusing. And if I lose, it would drive me nuts over the weekend. And I wouldn't be able to think about anything else but that, knowing that I know better. I've been doing it for 30 years. I've learned these lessons painfully. So I have to listen to what my experiences taught me. That scar tissue, while it doesn't promote a lot of flexibility and growing, I don't need to grow anymore. I know where my weaknesses are. I know what works. I know the market. What separates me from everyone else is I know when to put the brakes on from me. And most of the people out there that's pretending to be a mentor or a successful trader, they probably haven't discovered that skill set in themselves, because number one, they're too new. They haven't been doing it long enough, or they're fake, which really cancels the whole discussion out anyway. But we're in that fair value gap I mentioned. 1 minute chart on NASDAQ. And that fair value gap is small, but it's on the 1001. So if I wanted to see bearishness, I would like to see it, start to drop from here and be much more energetic going back below that fair value gap that I mentioned on the 5-minute chart at 9:30 last night. Something of a little bit more of an imbalance still on the 5-minute chart. It hasn't really completely come up to the low of the candle on 5-minute at 9:55 a.m. Just below it right now. All right, now we just did that. So in my mind, if it wants to go lower, it would want to start showing a willingness to do that now. Otherwise, any retracement back up into that 215 5-minute fair value gap from from Thursday, yesterday. I know some of you hear me talk like this when there's not a chart in front of me. And you're like, why don't you just do this? Why don't you do that? Why don't you just accept the fact that I'm sharing? Okay. I'm wrestling with something, and this is all I'm willing to do for right now. But, as long as you have a desire to keep wanting to do what it takes for you to learn more. And I'm not saying this has to be me. Like, if you get to the point where you arrive at the idea that I'm not the guy to learn from, I'm okay with that. I promise I'll live. It's not going to hurt my feelings. Okay. There's people out there that make money trading. And I'm sure, if you really make an attempt to try to learn how to do it, but you focus primarily on you, because you're going to be the success or failure ultimately that decides the outcome. And so many people come into this industry and they love to hold on to that little card, the excuse why they couldn't do it. It's the person I learned from. It's the this, it's the that. When in fact, as long as you know how to manage risk properly, don't risk too much per trade. If you learn that skill set, let me put it in proper perspective. Okay. If you go through the pathway that I think is the optimal way of learning, which is, number one, if you're going to be trying to trade, you have to discount all the bullshit where people say you can't time the market, because we can, other traders do, and you have to predict price. You're not reacting to price, you're predicting it. So anything apart from those central tenets is bullshit. As long as you don't waste any time outside of those pillars of thought about trading. If you're an opponent to anything I just said there, you're fucking doomed. Okay, you're not gonna be good at this, and you're gonna be a one-hit wonder, and you're never gonna have long-term consistency. I guarantee you that will be the outcome. But assuming that you can align your mentality with that, the first goal is for you to identify where the market's going to draw to. If you can determine where the market is most likely, not all the time, most likely where it's going to reach for, That's the largest portion of the battle. Like that's the thing. That's the thing that makes this so impossible for the new students or a new trader. Because you're looking at whatever time frame you're looking at, and you're trying to find a pattern or an indicator indicating something instead of understanding where price is trying to travel to. It's trying to go up or it's trying to go down. And if you can get that correct more times than not, what have you done? You have arrived at a bias. And here's the thing that you need to understand. There may be times where that bias is not obvious. What do you do in those circumstances? Nothing. You wait. You simply wait. What are you waiting for? For the period of time when it is obvious to you what it's trying to reach for. And as soon as you identify it and you know what it's likely to draw for, higher or lower, a specific level, not a zone, then you determine where you're at right now. Is it time that we expect volatility to increase? Are we in a specific time of day that is conducive for a sustained price run? Or are we in Asia where it's likely to sit around and do nothing? But ICT, I got 6 examples right here where Asia, I know that, but predominantly, you know that between 9:30 and 11 o'clock, there's a strong tendency for the market to want to do what? Move. And then have a retracement during the lunch hour. And that retracement may set up another leg higher or lower, whatever the morning session did, or a reverse. Those are all amplified topics that you want to tackle later on. But in the beginning, you just want to know where the market's likely to go to. If you do that, you're on your first steps to avoiding failure. Because everybody that doesn't know where the market's likely to go, they're failing. They're missing the point. The plot escapes them. They have no idea. So if you start there, and I have lessons, all my lessons teach that. There's a video that says draw on liquidity, because all of my discussions, every example, every lecture is always talking about that. It's always giving you a little bit more insight about each and every aspect that is required for you to get good at that. And here's the missing recipe ingredient to that. Time. Time doing it. Experience is going to be your best mentor. That's why I tell everybody sit down with me for at least a year. And you'll know if you have it in you. But you're going to learn a whole lot of things that I can't sit down and say, you're going to learn this, you're going to learn that. You'll know what resonated with you. But if you understand that skill set and you get good at where the market's likely to go to, the next thing you need to understand is risk management. But ICT, I need an entry. No, you don't. Because you literally can buy or sell any fucking wares appropriate. Don't think so? Test me out in August. August is the shittiest month of the summer. It's big money goes away. There are moves in August. I'm not saying there's going to be any volatility, but generally, symmetry, precision elements gets a little bit muddy in August. I'll show examples of it being there, but you collectively as a community should think, okay, August, if you're going to do any kind of vacations, it should be the month of August. And feel confident that being away from the month of August isn't going to hurt you. Now, if you have that skill set of knowing, or if you're going to borrow mine when I point to certain things where I think the market likely to go to, use a micro lot. One. Not a mini. Not multiple ones. Not 15 because your funded account says you can do it. Trade with one micro lot. One micro contract. And just literally, as soon as you identify the draw, determine how far it can go against you before that idea would be null and void for that session. And wherever that is, it might be 30 handles. It might be 45 handles in the NASDAQ. Use one micro contract. That's it. One. And get in there and trade with it right there in a demo, not with your live account, and put the stop loss at where you think it would fail in that idea. and you put a limit order at the draw. You're going to find huge consistency doing that. But I'm not making a lot of money. Right. Because in the beginning, it's not about making money. It's about you conquering your fear about doing it wrong. But you want to be right, and you want to make the most that you can make when you're right. But you don't want to lose anything. You've literally created this idea of trading in the realm of impossible. Because that doesn't exist. Nobody can do what you're thinking trading's all about. Nobody does that. I don't. I'm an inner circle trader. I don't fucking do that. There's an imaginary oasis that exists in the minds of traders when they first start doing this. They think that there is some way out there that they can always go in and get the biggest winning portion of the trade, and always have the smallest, tiniest little bit of risk and be 98% profitable. No. You want someone to tell you? I will. No, don't do that. Don't think that. Don't believe that. When you're first starting, where your focus is, what you should be believing is the most important thing is understanding where's the draw on liquidity, and work with that. Accept the facts that when you get it wrong, okay, what didn't you see in the chart? Go into your charts and really break it down. What was there that you didn't notice? And encourage yourself to say, you know what? This was a good opportunity for me to learn this about that. Not get mad and cuss at yourself or say, I'm never going to get this, because that's failing. You're on the pathway to failure doing that. Nobody gets to the winner's circle being toxic and judgmental about themselves and not see the silver lining in what it is that they're trying to learn. You have to cheerlead yourself. You have to be your biggest cheerleader. And that happens with a journal. A journal never encapsulates. It never gives room for that. Now, you can observe what you did incorrect, but you have to turn that around and say, I did this incorrect during this trade and I didn't see this. I'm thankful that I had the opportunity to see what I didn't see then. Now I can use this as advantageous intel going forward. Do you see what I just did there? It's positive reinforcement about a shortcoming that you as a human being didn't have the capability and capacity to understand at the time. But you're not beating yourself up. You have to cheerlead yourself. You have to coddle yourself. Encourage yourself. All these things, these are positive self-talk. It's important because if you have anxiety, or if you develop anxiety, and some of you will, if you start trading with real money, you will feel your first panic attack. It's given. It's going to happen. You will feel it. And it will be scary. And that in itself is a learning experience. And I've had discussions about how to manage that too. But you can't avoid it. But when you know where the draw is and you get better at it and you work through those growing pains of not knowing how to do it right in the beginning, but learning to get better at it. And then you also learn how to manage risk. If you get good at manage risk and also knowing where the draw on liquidity is, guess what you have become? Think about it. What have you become? The highest probable outcome is you'll be a break-even trader. And that's a goal. When you first start, you want to get to that point because most people can't even maintain break-even. What does that mean, ICT? Like, what are you trying to get at here? In the beginning, everybody wants to go out there and start making money right away, but that doesn't work like that. Even with me training you, that's not going to happen. You're going to have periods of where you do well, and then one or two things happen, and you go into a tailspin, and either your skill set or your lack of control just goes into drawdown, and whatever you made, you give back, and you go right back to break even. You might dip below the initial equity starting balance of your demo, funded account, live account, whatever it is, but you just hang around that break even starting point. You make a little bit of money, and then you lose it. And then you lose a little bit going drawdown. You're not wrecking yourself. That's water. You're in the game still. You're learning that, oh yeah, I've had losing trades, but it didn't kill me. Yeah, I've had losing trades, but I was able to sleep at night still because I can still trade tomorrow. I have an account that I can still trade tomorrow. I can trade next week because I didn't blow the account. I didn't tear it up so bad that I don't have equity to trade now. You have to have that mindset about what you're doing, why you're doing it. But if you understand the draw on liquidity, where it's likely to go to next, and you do not impulsively take on large risk just for the sake that, well, my broker lets me. Really? The government lets us purchase cigarettes too, even though there's so many toxins in it. It's guaranteed that you're going to get lung cancer. Given enough time, it's not a matter of will it. It will give you lung cancer. Just because it's made available to you doesn't mean something that's good for you. The car goes faster than the speed limits. All of them do. Just because the car will go 100 mile an hour, is it appropriate for you to drive 25 mile an hour zone, 100 mile an hour in front of a school? No. But your car says you could. Why can't I? Discretion, concern, sanity. And you have to have that in trading. You can't lose sight of recklessness and the invitation that you are going to be given many times in this market. So now how do you get to break even? I just taught you. Trade it with the smallest singular unit of trading, even in demo. And you do this every day, and you condition yourself every day, and you learn more. Each example, each time you journal, you're going to learn more about yourself. That's the thing that you want to discover. That's the most important thing. It's not about the tricks I'm teaching in price action. It's about you, because you're not going to spend the time learning properly until you correct those very deviant behaviors that you don't recognize right now. That's going to prevent you from being successful. You don't see where that curveball is coming right now. Nobody does. But at the end of the first growth learning curve, when you finally get to your profitable model and you know what you're doing, when you look back at that point where you know you have something that is consistently profitable and you know what you're looking for in the charts to find that, when you look back at that point, you will see what you have done to yourself that made it more difficult and longer than it needed to be. And you will have to take ownership of that. And I talk to you with this idea in mind because it's always us. It's always us. And nobody wants to be honest and tell you that shit, especially if they're selling mentorship courses, because it sounds like you're beating up your patrons, you're beating up your customers, and you want to make them be all, hopped up and encouraged. Yeah, I have discussions with that too. But I look at you because I'm talking to my kids. I'm talking to you with the father role in mind. I want to see you do well. And I've fucked up a lot. And I've learned very, very expensive lessons that you can't get from these dollar mentorships. Okay. These fucking guys out there that just started this. You're not going to learn anything from them. You're not. There's nothing wrong with appreciating their approach to trying to do it on their own. There's nothing wrong with that. And if they want to pay a subscription based, fee to observe them doing that, okay, call it that. But don't call it a mentorship because you're not really teaching anything. You're discovering yourself still. And you're fleecing people in their ignorance and their pursuit to try to get there faster. And I'm trying to be a voice of reason for people. I'm not 20 years old. I've been here for a while. And I've seen a lot of things. And I'm able to do a lot of things that most of these folks probably will never be able to do in their life. And the topics that matter most to traders' development are the boring ones. That's the foundation. Knowing where price is going to go. That's the first mystery that you have to solve in trading. Anybody that tells you that your job is not to try to predict price is a fucking moron. They're fucking stupid. They're moron. They have no business trying to be a fucking educator. You have no business even speaking on the matter of trying to teach anybody. If you're trying to tell somebody that their job is not to try to predict price, when the whole fucking point of trading is predicting an entry point and hoping that you're right in the directional bias that you've entered on. Otherwise, what the fuck are you doing? What is it that you're doing? If you're not trying to predict the future fucking transaction of price going higher or lower and being positioned to profit from that, what the fuck do you call what you're doing? What is it? Because where I'm from, that's fucking gambling. It's fucking gambling. I am not a gambler. I'm looking in there. I said, okay, there's a real reason for the market to go up there. Why? There's a huge pool of liquidity in the form of buy stops. There's a huge pool of liquidity in the form of sell stops. It hasn't been there in recent times. And we have seen the other side of that liquidity matrix tapped multiple times. And it's not showing a willingness to want to go in that direction anymore. So what's it going to do? It's going to revert back to the opposing side of liquidity. Replaced with liquidity, inefficiency. The same thing's happening. The mechanism for these price engines are going to be on the basis of two fucking things. Inefficiency above or below the marketplace. That's a fair value gap or real gap. What's a real gap? Opening range gap. A new week opening gap where there's no transactions made between two price points. Or above old highs for buy side or below old lows for sell side. That's it, folks. And once you understand what it is that you're looking for and reaching for, you can go into these moves and look at where points of entry can be made. And in the beginning, it's important for you to identify the fact that they don't have to be perfect. But you are expecting perfect in the beginning, and you can't obtain that. I can't deliver that to you. You are messing it up in the beginning. I messed it up. Everybody that ever learns from me in the future, they're never gonna be, if I did a 2024 or 2025, ICT comes out of fucking retirement. Boom, here it is. He was a liar. He's coming back and doing mentorships again. If that was to happen, and it's never gonna happen. In Jesus' name, I'm telling you, that is never happening. But if I were able to do that again, that batch of people that would come to me would not learn it faster, better. I wouldn't have another way of telling you these things would be the same things I would be telling them. But you're all asking me to open up a mentorship. I'm literally talking to you right here, unmonetized. I'm mentoring you right now. And you can't even identify it. You can't even recognize the fact that I'm mentoring you right now. But because you didn't pay me, you feel like you're not doing it or it isn't happening. These are the things that you're supposed to learn. These are the things that you're supposed to be looking for. What's the point of you watching my videos or listening to me talk about it unless you're going to put it to practice? That's a terrible waste of time. If you're just listening to me and you're not doing anything with the things I'm telling you to focus on, train yourself, test, build a back testing log of journaled entries and exits and things that you studied in old hindsight moves. If you're not doing those things, you're wasting your time. And that's horrible. Why would you want to do that? Time is something that we don't get more of. And my time is fucking expensive. There's a whole lot of things I could be doing right now instead of talking to all of you. I'm not getting monetized for this. I'm not getting any reward for it, except for I know I'm talking to somebody. Somebody in this community right now that's hearing this. You may be listening to it in the future. You're not listening to it July 21st, 2023. But it's found you. You needed to hear these things. I can tell you this much. When I was 20, I needed to hear these things, but I didn't know that I needed to hear it then because I was worried about entries. I got to find an entry technique. We're getting ready to blow out that sell side, by the way. Went all the way back up to that inversion fair value gap again. Lost my train of thought. Give me a second to get a drink. 45-minute session, remember? Good old ICT. Over delivers. Anyway, Failure is a choice. Okay. And if you learn how to determine why should the market go to a specific level? Okay. If you can identify both ends of the perspective or spectrum. Okay. And what does that mean? This morning I sent you a tweet on the NASDAQ. I'll give you one market to watch. I wanted to focus on one market. And why did I only pick one market? Why am I not looking at ES? Why am I not looking at Eurodollar? Why not cable? Wasn't cable the favorite pair of you in trading Forex? And why aren't you looking at the dollar index? And why don't you ever talk about the Dow? Why don't you worry about what I'm talking about and focus like I'm trying to keep my focus? You ever consider that? You ever ask, well, let me see what I can get from just following whatever he's looking at right now. That's what I always ask when I see people complaining about, why don't you ever talk about gold? Fuck gold. Gold is highly manipulated. Okay. You literally are asking to get burned trading gold. I know there's a lot of people out there with, they're fake brokers. They're going to show you examples of gold and this and gold and that. Gold is an event driven market. So what I do is I take my students into highly liquid asset classes. Forex was my cup of tea for a long period of time, but I took everybody's attention back to where I started as a trader in 1992, commodities and futures index. These markets are absolutely professional. There's no tomfoolery in that. There's no brokers fucking with your spread. Okay. Everybody has the same price. Everybody has the same price when we're looking at the S&P. Everybody has the same price on NASDAQ, unless you're trading a CFD, which I don't do that. But I know some of you can't do it, and that's the only way you can do it. But you're met with that conundrum now, aren't you? You have to deal and factor in spread. So how do you overcome that fear? ICT, I'm worried about because, sometimes the data doesn't match. Right. Well, think about what I already said. You first start worrying about, well, no, I shouldn't say worry. You should concern yourself with where the market's likely to draw to. That is the absolute golden ticket. Because if you know how to do that, given enough time, you will find a entry model that you'll love taking. It makes perfect sense for you. It meets and agrees with your personality. No matter how much money I show I can make with one PD array or another, it won't matter to you. That's maturity. That means that you have found your model. You're not trying to leave what you found. You're now blooming where you're planted.